All right, you are looking live at the Nasdaq, which this head and shoulders situation is playing out. Mentioned this here, the bears are just having a party here with this index trading lower again today, 248 points or 1.87%, and closing at 13,059. And it did not undercut the low from the rally day, but it's sure looking weak. That low is 12,963. Today the low was 13,008, so very close. Anyway, the index, I always ask myself, is the index proven itself? Is it worthy of my investment dollars? And right now you'd have to say no, unless you're going to play the short side of it, but I'm not going to do that. It's pretty stretched to the downside. And one news article, one news item, and you get your face ripped off shorting individual stocks when it's stretched this far. I did want to point out, this is playing out, the scenario is playing out, and what I'm looking for is that 12,963 to hold. And if it doesn't, it doesn't, but I'm not going to get short. Oh, like I've mentioned many times, the oversold market can become more oversold, but this thing has not proven itself, and it's not worthy of our investment dollars. So that's, one thing that I always ask, myself is like, where is this market? Because the market direction is, 80 and even more, 90% of stocks are following the index today. I did want to show you one chart, and when everybody's talking bonds, it's trouble for the stock market, and everybody's talking bonds here. And I wanted to show you the weekly chart of the 10-year yield. You can see we had low interest rates for a long time, but this is your, bear market when they just went kind of parabolic there in 2022. And then it kind of had this little, consolidation area where we had a strong rally here this until July. And now they've just gone parabolic here at a 4.8%. I showed at the site on my website, there's only 11 stocks in the S&P 500 that pay a higher dividend yield than what you can get on the 10-year. So the 10-year is very inviting for people to buy some fixed income without the risk of having, equities, and losing appreciation. This is a monthly chart, which shows, we had this nice bull market as the rates were, going lower for longer. And you can see this making, lower lows, and there's your COVID low. And since then, it's been rise up. But this is, the alacrity of that move right there is just tremendous. And that's what put pressure on our market in 2022. And there you can see the consolidation. Now it's just gone parabolic here for like the last 7 or 8 months, just straight up. So that does put pressure on your stocks. And like I say, if we're talking bonds, there's real trouble with the market. I'm a stock guy, and so I look at stocks, and they're looking bad too. This is Apple Computers. This one, or it's just Apple now, no longer Apple Computers, right? But you can see in a lot of the stocks here, this little wedging action here, wedging up to a moving average and then trading down. This one is down less than the index here, so not too bad for Apple. Microsoft, much worse today, down 2.61%. That's that same wedging action. There's no strength there. These things need to eat their spinach and just blast through, higher with some volume, but it doesn't have the strength. So like I said, they need to eat some spinach. Meta, this one is the best, the strongest, I should say, of all of these magnificent 7 stocks. Meta is closed right there. Wow, you could see the moving averages have converged, within what 2/10 of each other. That's usually bullish, but in this tape, they're all bets are off. Google, it was showing strength, but it's got that wedging action as well, which I don't like, because like I said, you want to see this thing power higher, and it just doesn't have it. Amazon, same thing, that little wedge action without the strength. All these things need to eat some spinach and get some strength. This is Tesla. It's that same wedging action, and it was down only 2% today. Not bad considering the the Nasdaq. And then there's probably the most pronounced wedge of all these stocks up to the 50, and then slapped down nearly 3% today. So it doesn't look good. They're all, below their 50 simple moving average. The short-term moving averages are trending lower, and it's just it's a weak tape. So that's all you can say. The bond market is putting pressure on it. There's political uncertainty with Speaker McCarthy being removed. So there's a lot of negatives and uncertainties that are just causing a weakness in the tape. A couple other stocks I got to show you that are leading stocks at my site, MC Stock Charts. Novo Nordisk sliced its 50 today, and it has a gap to fill down here. I want to say, what is this? 80.94 is a gap for NVO, and Eli Lilly, which has been so strong. This one has a gap as well, way down to like 455 or something. Yeah, 455. 455 exactly. So it's another $75 if you're holding that thing long. Be careful. Caterpillar slices 50, had that little wedging action and got rejected at the 50, but still consolidating. I mean, but there's so many stocks below their 50, and with the indexes all below their 50s, some of them below their 200. It's just a real weak market here. Anyway, I could find you a ton of weak stocks like Target making new lows, Bristol Myers making new lows. There's just a lot of stocks that look like this. Merck, another drug stock, just cratering. I don't want to get into all the weak and negative stocks. I want to take a look at stocks that are showing some strength here that we have. Leading stocks showing strength. This is Arista Networks that found supported at its 50 and bounced, and it's above all its moving averages right now. That one looks pretty good. And believe it or not, Intel is one that I don't have. This is not one that I have identified as a strong stock, but it certainly has. This one's rallied through its 50 after hours. They announced a spinoff of, they're going to have an IPO, and I'm drawing a blank on the name of the business. Anyway, the last one was Mobileye, and that one did okay. And gosh, I'll have it in the morning. Anyway, I'm going to move on. ESTC, another one of our leading stocks. This one, gapped higher, and now it's it's being supported at the 10 for now. It closed above the 10. So any stock above the 10 is showing strength. This is a Console Energy, CEIX. I've mentioned this before, as it has these little bull wedge patterns as it pulls back to moving averages and finds support. And maybe it'll do it again this time. This will be an opportunity. Just got to wait and see. Tidewater is another one of the leading stocks that we have, and this one held its 21. Stocks above the 21 are pretty rare, with all the indexes below their 50. VRT, which is Vertiv Holdings, this one holding up well, showing strength. Just watching it, just observing the fish tank here. That's all I'm doing. We can't control the market, so we can certainly control and manage our exposure to the market and the amount of exposure. And you don't want to be a cowboy or a hero, going large on some of these stocks in this tape. This is FN, Fabrinet. This one had gapped up on earnings, pulled back to the 21, found support. And if you look at the weekly, you can see this is, 5 or 6 weeks consolidation there. So definitely showing strength. That is in the electrical contracting manufacturing group. And so is JBL, Jabil. This one gapped higher and is showing strength. In fact, it's one of the strongest stocks I can find. It's 8.1% above its 10 EMA. So that is one of the rare birds out there. BRBR, this one was on our watch list this week. It's going sideways, which is good. Sideways and flat is good in this week tape here. So holding above its moving averages, and that's about the best you can do in this tape right now. This is a KNSL Capital Group, an insurance company, held its 21. Definitely a strong stock, showing strength. APP, this one is on our list. I don't know, how is this one doing? Oh, lost its 21. Yeah, 1.9% below the 21. So it's pretty rough out there. A lot of stocks that are just showing weakness with the index. And that's all I have for today, except for in honor of the great Steve Jobs. I'm going to go through a couple of our watch list stocks and just kind of explain. I have the watch list for just to see how strong stocks and stocks that are setting up are behaving, not to just dive in and go 20% of my portfolio and hope that it goes higher. No, I just want to see how the stocks are behaving. In this tape, crowd was down 4.4%, while the index was down 1.9. Kind of like expected behavior, not egregious. And this one, yeah, it almost held its 21 today. It's 0.8% below the 21. So maybe it takes a trip to that 50. Would not be the end of the world there. 157, rising 50. Crowd still looks good to me. But with the indexes being so weak, I'm not expecting much. This is the opposite of what I showed you earlier with those bear wedge patterns. This is more of a bull wedge pattern as it pulls back to a moving average after an increase. After it shows strength, it pulls back in lighter volume. So that's bullish. All right, that's pretty rare in this tape. And the last one I want to show you is DUOL. And this one is a little more choppier. You can see the double bottom base pattern here as this one trades down, gets a little bit of strength and makes that second bottom there, shakes everybody out, then rallies through the 50. And that's what I'm talking about with those wedging stocks. It's got to rally hard through that 50 like that. And none of those stocks can. And it just pulled back to its 50, found support, and then really blasted off higher. And in a better tape, this thing would probably be ripping, but now today it just pulled back to its 10, which, as you know, there's not many stocks right there at the 10. Most of them are below the 50. I think this is the most stocks below the 50 since the COVID crash and the taper tantrum of 2018. This is really an oversold, really a weak tape. Very few stocks are holding up. And anyway, that's all I have for today. Hang in there. Never give up. Keep the faith. This too shall pass. And the uncertainty of Washington will get squared away. And at some point, those rates will subside, and we're going to get some sort of a snapback rally or relief rally at some point. So just hang in there, be vigilant, be patient. This market's going to test your patience. It's going to test your discipline. So don't be a cowboy. Don't jump in. Just wait for your spot. And then we'll strike when the time is ready. But now is not the time for me. Anyway, thank you for watching. And at mcstockcharts.com, we never give up.